But right now, we have this drop and then this sideways chop. And again, it doesn't guarantee it, but most times, the end result is a move to the downside. Remember this chart? We talked about bear flags, down move, sideways chop, and then it breaks down. Well, if you look at what Bitcoin is doing, it's doing essentially that, right? It's just a tighter range. But right now, we have this drop and then this sideways chop. And again, it doesn't guarantee it, but most times, the end result is a move to the downside. People look at me and they're like, oh, it's Gareth, Soloway, whatever it is. But the essence of it is I'm just following the charts. That's all I'm doing. When the charts are bullish, the charts are bullish. When the charts are bearish, the charts are bearish. A true investor and trader never assumes. We always go to the charts. And by the way, are the charts 100% accurate? Not at all. The charts are going to be somewhere in this range. All right, it means that 70% of the time approximately they work out, and 30% of the time they won't. 70% success rate. All right, that's again the goal. All right, now I'm able to get my success rate a little higher than that because I have a lot of tools, I have a lot of experience. But in general, if you're following the charts, what this is telling us is that 70% of the time, that's your resulting move. 30% of the time, it could go like this. And you have to be okay with that. You know, again, you are the casino. You are not the gambler. The gambler, the odds of a gambler at best, close to 50%. At best. Now, I'm not talking about poker where you can be a better poker player and you're playing against other people. I'm talking about casino games where you're, playing. That's the best you're going to get. In any case, where is your target? Obviously, first target I've talked about, right around 25,000 on this. If it breaks, you're going all the way down here and you're looking at $20,000 as a target on Bitcoin. Quickly, gold. Is there any change in gold here? Gold could be putting in a bullish pattern of consolidation. What we see here is a little move up here, right? A little bit of an uptick, okay? Very tiny. I know it's hard to see, but you're getting a little sideways consolidation. It's the inverse of a bear flag, which we just went over. I do have some education here. I just wanted to show you. Here's your bull, right? So essentially, here's your bullish pattern of consolidation. You have your up move, your sideways consolidation, and then you pop to the upside. If you look at that pattern, this is kind of a minute setup of what we're seeing in this chart here. If I zoom in, right? So here's your chart of gold. You've had the move up. Now you're going like this. And again, the idea is that the upside is now the higher probability based on your consolidation. Now this is the NASDAQ, right? And what we saw on Friday, we saw initially a sell-off. Remember, all week long we were looking at Jerome Powell and what he was going to say in terms of his comments. Now, initially, his comments came across pretty hawkish, and we saw the NASDAQ dropping here. We saw a little bit of an early drop in the markets. Now, remember, this was coming off of this epic reversal the day before on the back of NVIDIA earnings. So NVIDIA opened higher and reversed, and that took the whole NASDAQ down with it. Now, Friday, we actually ended up gaining on the NASDAQ. By the end of the day, we were up on the day. We were up on the S&P 500. This morning, we're actually up again. Now, the key here is this. If you look at Jerome Powell's speech, it was hawkish, but it was hawkish not only because elevated inflation may remain longer, but because the economy is still very strong according to the Fed. Price action was telling us that the market liked the fact that Jerome Powell was saying that the economy remains resilient and that he's not seeing major cracks. Now, I disagree with that personally. I disagreed when he said inflation was transitory too. But again, time will tell. I just wanted to go over this. Now, if there's something here that's starting to get intriguing to me, all right? Now, if we look at this, right, we basically have this pattern formation here with a little blip and a little blip. And if we go to the S&P 500, the spiders, we have this same sort of pattern here. Now, what I'm concerned with on the S&P is a potential head and shoulders formation. All right, now head and shoulders are bearish formations. I want to show you real quick here what I mean by that. So bearish, we're gonna do a crash course in education now. It's a pattern like this with a head and a shoulder, right? And the idea is you can look at your neckline here, and when price breaks your neckline, which is right there, and by the way, armpit to armpit, then this is a drop like that. And the beauty of it is, and this is something that we've created here and that we've gone over, is that you can calculate your target you take the highest point of the head, drop a plumb line down, and that distance will be a measured move down here. Okay, so essentially it's a bearish pattern, but there's some rules that go with these. People are horrible. When you see on social media, our people are like, oh, that's a head and shoulders pattern. A lot of times it's not. I'm going to give you the keys here. One of the things is this pattern has to be at the highs of a recent chart. Otherwise, if it's not recent history, and on a daily chart, you're looking back at least 6 months, maybe a year, right? So I would say about 6 months at minimum. So is it at the high of the chart? Check. Okay. Now, the next thing is are both shoulders lower than the high of the head? Yes, yes. And there's your head, higher than both. Check. Okay. The next thing is the neckline, and this is really, really important. The neckline has to be on a head and shoulders flat or upsloping. It can't be downsloping. Invalid. That's an invalid head and shoulders if you get a downsloping trend line. Okay, so is this, the one I just drew, is it an upsloping? Yes, it is, so that's valid as well. So we would say check. All right, so that is all. Now remember, just because you have the shoulder over here, it only triggers, it only becomes relevant if you get and break this point right here. That's the only time it becomes relevant. All right, and you'll see what I'm getting at here. So what we have here is, here's a potential head and shoulders. All right, now again, it's preliminary. Now, preliminary means that you're still in the process of forming the right shoulder. So the question is this at the highest point on the chart in recent history? Yup, it is. All right, check. Is the shoulder here and the shoulder here lower than the head? Check. All right, now has it broken the neckline? And is the neckline flat to upsloping? Yes, it is, right? Slightly upsloping or flat. So check. That's another check. All right, so now it's checking off the boxes for is it a valid head and shoulder pattern? All right, now the question is, has it broken the neckline, which would be the trigger? And the answer is it hasn't yet. The neckline is down here. Price has to violate that. Now, for all we know, we could go like this, right? I mean, it doesn't really matter. Ultimately, this is where it would trigger. And if it triggers, right? So let's do a little calculation here. There's your neckline, right? And now what we want to do is we want to go down to our measure tool, take the highest point of the head and shoulders, drop it down. So now it's a $26.20 move on the SPY. So what we do is we do that same sort of thing over here, and let's just say we don't know where it breaks now. Now, please understand, I'm guesstimating where it's going to break. We don't know, but you have to do the measurement once it breaks. So basically, if this plays out, I hope you guys can see this, but if this plays out, okay, you have essentially a target of right down here, okay, at 40, right here, 407 as a target price on the head and shoulders. So that's pretty crazy, guys. That's actually